Good morning, everybody. It's Wednesday, December 4th, 5:26 a.m. Central Time. Grain markets are lower this morning. March corn futures down 2 at 4.30 and a quarter. January soybeans down 9 cents at 9.82 and 3/4. March Chicago wheat down 5 at 5.42 and a half. March Kansas City wheat down 5 at 5.36 and 3/4. March spring wheat down 2 3/4 at 5.87 and a quarter. We had some biofuel news out yesterday. Let's start there.
So, Reuters and Bloomberg have released conflicting reports regarding the finalization of 45Z tax credit guidelines. Reuters reported yesterday that the US Treasury won't issue guidance for the tax credit before President Joe Biden leaves office. The tax credit is scheduled to begin on January 1st. The delay is due to disagreements between ag lobbyists and environmentalists over how the program should meet climate goals. The biofuel industry is urging lawmakers to extend blender credits, which are due to expire at the end of the year. The industry hoped the program would be finalized before Biden left office, fearing that Trump might cancel the Inflation Reduction Act, which started the program. In a conflicting report, Bloomberg stated yesterday that a US Treasury spokesperson confirmed the department would in fact issue guidance before Biden's term ends, allowing eligible producers to claim 45Z tax credits for 2025.
Lots of confusion here yesterday, and we're not sure exactly who is right. Reuters says no, guidance is not coming. Bloomberg says yes, it is coming. And then S&P Global was out and reported something, and they said actually that they had a name, or maybe it was Bloomberg. Who had the name? S&P Global had a name. They said it was Michael Martinez from the U.S. Treasury Department said that there would be guidance before the end of Biden's term. This is extremely interesting because what we've seen to this point, because of the delays, is a withdrawal of investments. You saw Wolf Carbon cancel this pipeline. You saw Navigator cancel their pipeline plans. The lack of guidance isn't the only reason, but it's definitely part of it. There was, of course, a lot of landowner pushback and that sort of stuff. And what we really need, at least as it relates to the markets, if you want to be more in balance with regard to the supply and demand situation, we need to be producing more ethanol. Corn ethanol production in the United States has basically been stagnant for 10 years. You had your ethanol boom 2006, 7, 8, and we've been pretty much flat since 2014, 2015. I know ethanol yields have probably improved a little bit, but generally speaking, we flatlined. So if you want to improve corn prices through better demand, improving ethanol production and adding to this, making this number go higher would be a way to do it. Now you'll get into your food versus fuel debate again. We're already using 36% of our corn crop to produce ethanol. And should that number be 40 or 50% just to ensure that prices are better for the farmer? It'd be good for the farmer, but there's going to be people with a lot of issues with that. I mean, step back. Does it really make sense to use half our corn crop for ethanol? I don't know. But, with regard to the markets, we would like to see stronger ethanol production. The big picture food versus fuel thing is up for debate. A lot of this has to do with the difference in a lot of the nervousness, I guess, has to do with just issues and the differences between Biden and Trump and what they want to do with tax credits and the Inflation Reduction Act and climate type stuff. And that's why you've got to watch yesterday's premium video where I talked about Project 2025 and farmers and what's included, because a lot of this is super, super applicable. To give you some backstory here, Trump pretty much denied throughout most of his campaign that he was associated with this Project 2025 write-up, which is like a 900-page plan for the country through a conservative lens. But more recently, he's added a bunch of authors and influencers for key roles in his administration. So a couple of things that were included there. Project 2025, if Trump wants anything to do with it, they want to get rid of ARC and PLC. They want to do some stuff with CRP that you guys might not like. There's also some stuff that maybe you would like. And I discussed that yesterday. I hadn't seen people really talk about this a whole lot. Maybe that damn thing's just too long and nobody wants to read it. And I'm not saying that Trump's going along with it or not, but I think you've got to consider the prospect that maybe some of these things become reality. It's pretty interesting to me, at least. If you want to see the premium stuff, go to standardgrain.com, sign up this morning. You know the deal. $50 a month, cancel it at any time, no other fee, no other obligation. Nobody will try to sell anything else. Sign up this morning. I'll forward you a copy of that video.
U.S. farmer sentiment climbed to its highest level in more than 3 years following the presidential election. Purdue University's CME Group Ag Economy Barometer Index climbed to 145 in November, a 30-point increase from October. The last time the barometer reached this level was back in May of 2021. The Future Expectations Index also rose substantially, climbing 37 points to 161, the highest since April 2021. The rise in farmers' sentiment was largely due to a more positive outlook for future regulations and taxes following the U.S. election. Farmers' primary concern with the new administration is the future of agricultural trade. More than 40% of survey respondents believe a trade war is either likely or very likely under the Trump administration.
So farmers, generally speaking, got their man into office. I would venture to say the majority of farmers in the United States were Trump voters. It's not to say all of them. It's definitely kind of a mixed bag. So highest sentiment since May of 2021. Let's look at some price statistics. At the end of May 2021, spot month corn futures were $6.57. Today they're $4.22. Spot month soybean futures at the end of May of 2021 were $15.30. Today they're $9.84. Spot wheat futures were in the 660s. Today they're 541. So I have a tough time believing that farmers are as positive as they were back in May of 2021. A couple of things of interest here. 1/3 of November's respondents said they expect their operation to be better off financially a year from now, compared to 19% who felt that way in October. 34% of farmers in November said they expect good times financially for the U.S. ag sector in the next 12 months, compared to 15% of respondents in October. When asked to look ahead 5 years, over 52% of November's respondents said they expect U.S. agriculture to experience widespread good times, compared to 34% who felt that way in October. I suppose you have to be an optimist to be a farmer, to make your way through these kind of bad bear market cycles. The trade war stuff was interesting. So how likely do you think U.S. ag is at risk of a trade war that results in significant decrease in U.S. ag exports? 32% said neutral, 27% said likely, 15% said very likely, and then you've got maybe a quarter that said very unlikely or unlikely. So kind of a mixed bag of results here. So I'm happy to hear you guys are positive, but I don't necessarily know that I see the reasons, but good for you. You need some optimism in your life.
The European Union has tentatively reached a deal to postpone a deforestation law. The European Commission proposed the law to limit the import of products linked to global deforestation. The law requires importers to provide complete traceability to ensure items like soy, beef products, and coffee don't come from deforested areas. Brazil, Indonesia, and other agricultural giants were critical of the law. The delay will give European businesses, farmers, and foresters time to prepare before the law takes effect. The EU member states and Parliament will now need to officially adopt the tentative deal before the end of the month, which is normally considered a formality.
So we don't do deforestation in the U.S. They do a lot of deforestation in Brazil, and that would be like our big competitor when it comes to soybean exports in particular, corn exports to a lesser extent. The European Union is, in total, the second largest importer of soybeans, but a very, very distant second. China's number one with 109 million metric tons. The European Union, 14.6 million. So they'll account for 8.2% of global imports. And I would find it very difficult to believe that they'll like totally eliminate anything from Brazil. Maybe some stuff from Brazil. I don't know. Corn, the European Union's a slightly bigger deal. They account for 10.3% of global corn imports. Mexico's number one. China will be number 3 this year in all likelihood. So I suppose this could have some impact. It's another story that doesn't really add or subtract bushels from the global balance sheet. Could just be a game of musical chairs if they decide we're not going to buy from Brazil. Somebody else will.
ADM is prioritizing cost reduction measures in response to ongoing challenges within the farm economy. The grain trader is anticipating profits will continue to decline next year due to low crop prices, uncertainty about biofuel regulations, as well as a potential trade war between the U.S. and China will also challenge ADM's profitability. As we covered yesterday, ADM is currently being investigated by the SEC and federal investigators over accounting errors in its nutrition division. Year to date, the company's stock has declined 25%.
Couple of quotes from the CEO, ADM CEO Juan Luciano. Says that they are running scenario planning ahead of possible U.S. tariffs on China. Says large global footprint, a benefit for ADM. He said they're focusing on controlling costs amid softer soy crush margins. That's been an issue for them. U.S. biofuel regulatory uncertainty is something we alluded to at the top of the show. So yeah, they're preparing for a lot of things here. I mean, if you're a big commercial right now and you're involved in soybean crush, biofuel, also in trade, you've got a lot of things to be concerned about with the change in the balance of power.
President Joe Biden has awarded more than $100 billion in clean energy grants. The grants were established through Biden's signature climate legislation, the Inflation Reduction Act. The funds are intended to support the ongoing expansion of clean energy after President-elect Donald Trump, a climate skeptic, takes office. The Biden administration has obligated more than 80% of the grants, meaning that they are secured and it would be difficult for Trump to cancel them. The Inflation Reduction Act also offers tax incentives for clean energy projects, and a congressional act would be needed to cancel those subsidies. The grants will fund green energy projects such as carbon capture, wind power, and solar energy.
So I think the Biden administration is aware that Trump wants to undo a lot of this, and they're going to kick as much money out the door as they possibly can prior to Trump's inauguration. And a lot of that goes back to what I mentioned with Project 2025 and just Trump's general dismay, or he doesn't like the Inflation Reduction Act. He's called the Green New Deal, the Green New Scam. I mean, he's gonna undo some of this. It's just a question of how much. So Biden is getting ahead of this, throwing money out the door. So the same with regard to like the Russia-Ukraine war. They're sending a bunch of money to Ukraine, before power changes hands here. So lots of stuff going on. What did cattle do yesterday?
The cattle market was up. Live cattle were 55 cents to $1.15 higher. Feeders saw gains ranging from 95 cents all the way up to $2.45. Box beef was lower. Choice ended the day at 310.83. That was down 218. Select ended the day at 275.33. That was down $1.67.
Outside markets fairly quiet this morning. U.S. dollar's up a little bit. Stocks are marginally higher. Bonds are off a little bit. Precious metals mixed. Crude oil is up 12 cents in the January WTI at 70.06. Have a great day, guys. We'll be back on Thursday.